Our next session dives into the trends shaping game investment today and how to keep forging ahead in a tough market and where to find the next wave of players. Please welcome our panel of game M&A and investment experts, Hemal Thakkar of Goldman Sachs, Tyler Matheson of Makers Fund, Lloyd Danzig of Sharp Alpha, and our moderator, Emily Wang of Griffin Gaming Partners. Thank you.
Yeah, thanks everyone for joining. As she mentioned, I'm Emily. I'm partner and CEO of Griffin, and we are really excited to have this great panel with us today. We know that most of you in the audience are developers, whether emerging or established, and so just excited to take advantage of our expert M&A, as well as key investors to talk through an active M&A market, challenging financing market, and where we're seeing areas of new growth. So do we want to just kick off with a few intros and give a little bit on your background and your firm's investment areas and advisory areas?
I'll go first. Hemal Thakkar. I'm based here in LA. I run our global games investment banking business at Goldman Sachs. Most of my work has been M&A in the space, big and small, PC, console, mobile platforms, etc. Some IPOs as well, and a lot of private financings across the space. So nice to be here.
Great to be here. Lloyd Danzig, I'm managing partner at Sharp Alpha. We're a New York-based firm. We write $1 to $10 million checks at seed and Series A in sports, gaming, and entertainment companies. We use the phrase competitive entertainment to describe the umbrella under which we invest. Anything that gets you to lean forward in your chair, anything that gets the adrenaline pumping, B2B or B2C, that's what we're most interested in, and happy to be here.
Great to meet you all. Based in Los Angeles, Tyler Matheson. I'm an investor at Makers Fund. We're a global investment fund with folks spread across U.S., Europe, Asia. We do primarily seed and Series A investments, $3 to $15 million across the entire value chain in interactive entertainment. Most of what we do is on the content side of things, but we'll also do B2B tech and tools, and then consumer that has any interactive component to it. So great to meet you all. Looking forward to a conversation.
Great. So, Hemal, I think it'd be great to start with you to give the lay of the land. Obviously, Goldman has advised on a lot of the biggest deals this year, Niantic, Dream. So it'd be great if you could just chat a little bit about what buyers are looking for, if there's any themes or differentiating factors that you're seeing in companies that are getting deals across the line.
Happy to. So I think I'd start with the general sentiment across the M&A market is we are in a mature market for now. There may be growth factors that we're seeing, which we'll talk about. I think there's certainly more activity in mobile gaming at the moment than there is in PC console. I would say that's a function of most of the strategic buyers in the ecosystem are looking for, I would say, more recurrent revenue in a slightly riskier environment, right? Both macro, but also cost of capital having gone up with interest rates being where they are. The consumer is a bit soft as well. Durable franchises, right? I'm talking about the publishers at this point. Durable franchises sort of win the day. That being said, there are some other interesting things going on. There's companies who perhaps have great IP, great sort of creative capability, but are perhaps less strong on the business side of things. And we've seen quite a bit of activity there in terms of people investing in turnarounds, these type of areas where there's value to unlock. I would say there's also a fair degree of activity in terms of there's companies who perhaps have portfolios, right? Perhaps some parts of their games business are non-core, et cetera. So we see M&A in that vertical. In the smaller end of the space, so take it startups, et cetera, there are companies which are doing well. There's also companies that are not doing so well. We're seeing a lot of acqui-hires starting to pick up. I would say 2 years ago that was a bit trickier because everyone was focused on operating margin. Now I think people have their margins in place, generally speaking. And so if there's great talent, you can help with a certain franchise, something like that. You see startups pivoting in that direction if they haven't managed to kick off on their own. And the last area I'd say is, VCs have been in the space for a long time. They've been investing. There's pluses and minuses there we can talk about. What's interesting the last 12, 18 months has been the emergence of private equity and also private credit in this space. Some of the transactions that Emily mentioned had some of that played into it. That's going to be a big one. I think there's a lot of companies that are private perhaps they don't want to IPO, they don't want to sell for a number of years, and there's a lot of VCs in their cap table. Cycling that capital out in lieu of private equity for some of the mid-scale players is a really interesting play to go. So I think, yeah, it's actually busy, which I didn't necessarily expect as much coming into the beginning of the year, but yeah, it's active.
Thank you. And Tyler and Lloyd, it'd be great to get just the investor perspective on, how does current buyer sentiment impact your own investment strategies, given there's a lag between the time differential of early stage investments? So what Hamal mentioned about mobile really driving M&A right now, I think Steam games, PC games on Steam, there's 3 times the amount that are being developed versus mobile games on the App Store. So how do you view that as a sign of market saturation? How does that impact how you invest across platforms?
Yeah, I definitely say that this is one of the signals that we're looking at when it comes to a saturated market, and it, I think, continues to raise the bar for those teams that are in the PC console space. And I think one of the through lines that we're seeing, and we're taking into account for any investments that we do in the PC console world, they're working with founders that have a real sense of capital stewardship and ability to be really efficient and lean. This comes across in a few ways. It is folks that are hiring the right people that want to build and create a startup, knowing when and how to scale people up, being super ruthless about your prioritization of your scope, and then finding out how to punch above your weight when it comes to go to market, because there's just, like you mentioned, so many folks on Steam that are competing for the same eyeballs. And the reason this is so important is just because it gives folks a lot more optionality to pivot, to have multiple shots on goal, to not require a publisher or a strategic or someone else to come in and try to get them over the line to finish up the game. And for us, the more optionality that we can give these studios, the more chances of success we see in a market that continues to be pretty saturated and competitive.
I think raise the bar is the most important phrase that was used there. We see that across the M&A and investment decision-making ecosystem these days. Higher bar for metrics, for profitability, for capital stewardship, a great phrase, for cross-platform virality on the content side, for just fantastic metrics, session depth and frequency, time to first purchase. And then I think maybe a bit of a qualitative and quantitative one is this company one that can be a category leader, or at least a subcategory leader? I think briefly in 2021 or so, when Postmates was acquired for several $1 billion, despite being the number 4 company in the delivery service space, people thought you can generate venture scale returns even if you back the number 3 or 4. Now that valuations have come back down to earth a bit, I think people have been disabused of that notion, and it's really about, can this company be a category or at least a subcategory leader? We're investors in a company called Triumph Arcade, or go by Triumph these days, maybe some of you are familiar. If you're not, download the app. I think they make the best hyper-casual, mobile, skill-based real money games of anyone on the market, better than any multi-billion-dollar company out there. If you disagree, if you think you know games that are better, please send me the link so I can download them and then speak to the founders about investment opportunities. But for us, the metrics on Triumph were fantastic. We couldn't exactly get the ownership level that we were targeting because the valuation had crept up a little bit higher than where we usually enter. But we said, can this be a category leader? Absolutely. We think this team is an 11 out of 10 on founder market fit. We think they make better games that we genuinely enjoy ourselves more than almost anyone else in the skill-based space. And that is, I think, that qualitative X factor, especially at the early stage where maybe you have a little more time, you're not expected to IPO or exit in the current climate. Can you show investors that you are the type of founder, the type of management team that is going to build a category leader? I think if yes, almost everything else can fit in around that assessment.
Great, thank you. And so I guess given the market saturation, something that we've talked about is there's so many ways to tackle new markets, whether it's new geos, new technologies, or gamification of new industries. And so maybe we can just tackle these one by one. In terms of gamification of new industries, what are some areas that you guys are excited about? And how do you, as investors and advisor, figure out what's within your domain? What do you characterize as gaming, and what do you consider within your mandate?
What do you characterize as gaming, and what will LPs support as being in your mandate? It's a fascinating and nebulous question. I think finance, education are probably 2 of the most popular consumer-facing categories that are not historically gaming, in which gaming has been infused. For us, the collectibles space and the music space are areas where we're really interested in the type of gamification that is taking place, turning buying collectibles into something more like a slot machine experience, games that help you create music, music for games, music creation studios for games, games that feature musicians and their music, all sorts of formulations like that. And an interesting thing we're starting to see is a bridging of some of the historically digital gamification elements into the physical world. We've been spending a lot of time in this you might call sort of Top Golf for X or entertainment category. If you have not seen, there is now Top Golf for baseball, basketball, soccer, football, clay pigeon shooting, surfing, rowing, electric shuffleboard. My God, the list goes on. And what most of that means is they take a classic game that many people are familiar with, and they use some combination of computer vision and augmented reality projection mapping to create a new gamified version of that classic game, and then usually they wrap it in a nice sports bar or a food and beverage location. And some of those opportunities aren't only interesting because they're fun, but the companies have built really unique white label technologies that have a large market opportunity. Many people don't know this, but Topgolf's most successful business line is something called Top Tracer. That is a product where any existing old school driving range can pay $200 per tee box per month to retrofit the Topgolf functionality with the ball tracking and showing you the arc of the ball and the mini games against your friends. That is a 75% EBITDA margin business compared to the rest of the Topgolf business, which is 11, 12% on a good day. And so we think that type of gamification that's now making its way into the physical world is also quite interesting, along with, as mentioned, collectibles and music are areas we are quite keen on.
I'll highlight one specific vertical that I think is quite interesting, and I think the health and wellness space is something that we've seen be quite engaging. There are a number of pitches that we've taken recently that are all about companionship and how you can use artificial intelligence to create a companion for folks that are anywhere from young children all the way to aging adults and elderly folks. But I think there's a real opportunity in a space like this to create for folks who have game development sensibilities, to add in meta layers to make an experience that's not just a companion that you talk to that's a ChatGPT wrapper, but it looks and feels a lot more like an Animal Crossing or any set of cozy games that can get folks a lot more engaged and be a lot more exciting for folks of all generations. So health and wellness continues to be very exciting. We also kind of look broadly across entertainment at different consumer applications that are exciting for gamers. So we've been involved in the microdrama space for some time with 2 investments, one out of Japan and then one in the US, as well as the webcomic space, both for those more traditional players and also folks that are injecting interactive experiences into that. So working directly with IPs to create abilities for fans to both play with their favorite IPs and then also contribute directly to the creation and the canon of the IP. So there is, I think, a pretty wide swath of opportunities, those being 2 that we're looking at actively.
Would just add, we are seeing a number of gaming firms now expand their scope to say, all right, even if this is a completely different type of consumer experience, if you're using gamified onboarding and game development-like modalities for user acquisition planning, we think that is in our core competency as a firm. We became experts with that through our exposure to gaming, and we think there are other industries that have not yet been upsized or upscaled. And so we haven't necessarily made any in that space, but many of the firms that we love doing deals with in and around gaming, we're noticing more and more last 12, 18 months or so are starting to take opportunities to apply their gaming knowledge, especially in gamification-led onboarding, and apply that to other sectors.
Yeah, I'd actually echo that one. I think, and I see it at the publisher level, interestingly enough, where there's some major publishers out there, PC console and mobile, who are looking at some of these adjacencies, right? And saying, well, the business model that's being applied is perhaps like mobile in-app purchases to music or to short-form video or whatever. Some of these companies that are doing that stuff have popped out of nowhere in a year and a half and got to $100 million of revenue scale, which is wild, right? What I think, and look, I think it'll be a while before you see the publishers really buy things like that, but they're moving up that curve. I think what's interesting to me and I'd encourage anyone to listen to it. Like Mitch Lasky does a great podcast called Gamecraft. If you haven't heard it before, one of his older episodes talks a little bit about innovation curves in mature markets, and I actually think it's funny when I started doing this. For us as a former media banker moving into games, this is 10 years ago. The industry is remarkably similar in its maturity curve, and what you saw in media, call it 2015, 2016, is the emergence of how do you take market share essentially from the incumbents, because the TAM was basically the TAM. And it boiled down to two layers, either content innovation or distribution innovation. And I think you go through waves in that in games. I think business model innovation, there are new things coming up, whether it be skill-based, RMG, it could be physical, digital, interlay. You can apply that to other forms of content, which is what we just talked about. I also think in games itself, you think about what actually breaks through these days. It's not likely to be someone who takes one genre, another genre, and just smashes them together and says, I've created something. Probably not, right? Realistically, you have to do something new experientially in terms of gameplay for the player. Better graphics, all that good stuff is great. And firms who are focused on that, and that could be the publishers, it could also be startups, maybe using tools and AI and these type of things as well. It comes into the fray. But really the creativity piece is important because we are in I don't like calling it a saturated market because honestly I think it's still growing. And we've got a lot of other long-term tailwinds, emerging markets, advertising, candidly, cloud streaming. There's a whole bunch of things that will play out over the next 10 years. But we're not in a hockey stick market either. And so we got to think about, how do you migrate market share? Reality is you're competing not against other game companies. You're competing against other game companies and TikTok and some other whatever short, applications for engagement. Yeah.
Great. And Tyler, you alluded to this, but how do you all think about emerging geographies? Are there geographies that you're seeing a lot of growth that you're focused on, be it MENA, LATAM, India, Southeast Asia? And how do you kind of trade off player growth and monetization and innovation?
Yeah, there's a number of geographies that continue to be very exciting. Turkey is one of the ones that come to mind in terms of mobile talent. I think is top tier. We had a investment called Dream Games out there that have a lot of ex-Peak folks, and then a lot of folks that are spinning out of that as well. Two other geographies that we continue to watch. I think Poland is an interesting one with a lot of really, really talented developers coming out of CDPR and continue to look for new opportunities. I think there's a little bit of mistrust when it comes to folks that come from the finance space that are trying to get them a little more educated on how investing and financing works. But the talent is super, super rich. The Netherlands and the Nordics also is another area of a lot of really excellent indie talent that just don't quite have the level of trust that we would like to have. We would like them to have in folks that are trying to finance their opportunities. So we continue to look at all those places as not only exciting opportunities for talent, but also as consumer environments. And then the last one I'll mention as well is Korea being a really exciting and engaging market. The public market there is a lot more open, and the multiples are a lot more favorable to gaming companies. And then the talent density also is incredibly rich. We have an investment out there called Iron Mace that makes a game called Dark and Darker. And we've just been astounded at their ability to ship content and to really take a lot of creative risks and be a talent magnet for folks in the region. And we continue to be investing in there every day. We did the Hype Interactive media spin out there as well, and continue to look at opportunities in the space, particularly those that integrate the existing IP in the area.
We focus a lot on real money gaming, so I'll give an answer a little more specific and narrow to that vertical, in particular because in some ways the interesting geographic areas are a little easier to identify because it's places where there are regulatory unlocks taking place such that new forms or lower taxable forms of real money gaming are expanding. India and LATAM, most notably Brazil, have probably been the topics du jour or regions du jour for the last few years. I think very interesting as we look to the next 3 to 5. One is the Middle East. People always thought that would never be a region where you see real money gaming take hold. world. The UAE has now appointed a real money gaming gambling commission, and it's all staffed by Americans and ex-MGM guys, and certainly we'll see our way to imposing our form of casinos and integrated resorts in that region, and perhaps then you spread outside of Dubai and to elsewhere. And then Japan. Japan has a really deep real money gaming culture. The Japanese market just for racing, horse racing, dog racing, boat racing, and one other type I'm forgetting at the moment, rivals the size of the total sports betting markets of many other countries. Pachinko parlors are also a big form of Japanese culture, as are, of course, all other forms of gaming. Again, was often thought of as a culture that would just never relent and sort of give in to the American-style integrated resorts and types of gambling. There is now a large, I think it's MGM project in Osaka, a $10 billion integrated resort. It probably won't be completed till 2031 or so, but once you start allowing a brick and mortar form of gaming and gambling, that often causes some of the other dominoes to start falling, especially in a country where there is a really deep regard or interest in real money gaming, tempting fate, and things like that. So still certainly India and Brazil, but I think next 3 to 5 years, real money gaming in the Middle East and in Japan are definitely topics to watch.
The only thing I'd add would probably be, I kind of bifurcate it between where is their cost advantage relative to talent density, and then also what are sort of emerging markets from a consumer standpoint, but perhaps have less on the former. I think in mobile, we talked about it, I'm big on Helsinki, I'm big on Barcelona, I'm big on Turkey, Israel, by the way, wonderful studios there. It's hard to compete against some of the capabilities and costs that comes out of Korea and China. And they got multi-platform capability as well because they're PC and mobile native. For PC console, Montreal's amazing, right? And I think a lot of US studios are thinking about how do they get more out of that, which is a neighbor. But that's a man-month rate point. Japan, from a PC console standpoint, amazing talent, very low man-month rates still. And people kind of overlook it a little bit, hard to manage, but it's there. And then I think from a consumer standpoint, I think there's some of these markets that have very long, runway. They're going to be slow, but they have long runway. India, LATAM, Southeast Asia, by the way. And so, there's some positives. And there's also capital sources, right? Middle East is an amazing one from that standpoint. Very big focus there. The skill level of the talent has yet a long way to go, but the investment's certainly there. Most players, I think, globally are thinking about, okay, if I'm in a mature market and my revenue is no longer going to grow 10%, it's now 4%. I gotta get the TSR going somehow, total shareholder return, right? And so that comes through the cost side of things. And I also need to be able to take shots on goal without worrying that the next release is going to bankrupt my company, right? Again, cost. And then, by the way, we've had some geopolitical things that have come into play, right? If you think about, take the Eastern European situation, right? A lot of great talent in Eastern Europe and that bloc, and even in Russia, migrated into Cyprus or Dubai or these other areas. These are wonderful developers who know what they're doing, and some dislocated talent that people can take advantage of.
Great. I know there have been a lot of panelists devoted to AI, but we'd be remiss not to hit on it. So in terms of AI, do you all see it as a growth driver or more of a margin driver over the next 3 to 5 years? And what are you looking for when you see AI opportunities when it comes to sourcing or diligence or even on the advisory side?
I can start. I mean, my perspective is that it is going to be both. What is more interesting to me is the growth side of things. And this is always an interesting question because what I'm most excited about are opportunities that bring AI as close to the center of the gameplay experience as possible. That I think is where there's going to be a lot of really interesting unlocks. And there's a number of examples out there today that I think are quite interesting. I mean, you can look at SuckUp, AI2U. You can even look at the Fortnite integration of Darth Vader that happened over the weekend as a lot of kind of interesting signals of unique gameplay loops and possibilities that are percolating right now. Character AI is something that I think is one of the most interesting consumer apps I've seen that is very close to gaming. If you look at what folks do on there, it's all role playing and creating stories with people. So I don't know what it's going to look like. I don't know how close it's going to look like to a traditional game as well. But any team that is moving that experience of working with and interacting with an AI as close to the center of gameplay as possible, I think is going to be very exciting. And from there, from that, sprout of originality, I think a lot of interesting stuff is going to happen. I think those are the types of experiences that are actually going to break through, as opposed to just the 10% reduction in COGS when you're making something. So.
Definitely both. And I think even some specific use cases could be either a growth or a margin driver. If you use AI to acquire customers more efficiently, are you going to keep your spend constant and acquire a lot more customers and grow? Or are you going to keep the number of customers you're acquiring constant and cut your costs and improve your margins? You could, in theory, do either, and that very same application could be a growth or a margin driver. We're seeing a lot of interest in procedural world generation, NPC character generation, localization capabilities. You build a game for North America. How can you automatically port it over and make sure it's locally relevant in various places where it's being downloaded? One area that was not mentioned here, and I guess it's not necessarily a pure play AI, but it often gets bucketed in sort of this futuristic category and certainly touches on some AI elements. I think people are underestimating potentially how soon there will be a lot more proliferation of brain-controlled user interfaces, whether it's an Apple Vision Pro or a Meta sunglasses, where the new Meta wrist controller. At first, it works by you realizing that you can tap your fingers and create different functions that will then be correlated to actions on screen. But the next step is that what they do is they actually can pick up through the wristband the electrical impulse that your brain sends to your finger when you're going to tap two particular fingers together. And it can actually interpret that before you end up moving your fingers together. And then step 3 is what you learn as a user is you don't actually even have to move your fingers. You can just send a certain electrical impulse from your brain to your hand. And by the way, there are many, many, many more types of electrical impulses that you can send from your brain to your hand than there are permutations of ways that you could move your finger. And all of these, I think, will become just an entirely new modality that has a much lower level of lossiness or higher level of bandwidth when it comes to controlling anything, in particular in gaming. For those of you who might remember when we used to have to text message by pressing each number on the phone the number of times corresponding to the letter. And then one day someone came out with T9 Word, where if you just typed the letters that roughly corresponded to the word, it would figure out which ones you meant. And suddenly the throughput, the amount of control that you could put into a system with the same amount of sort of mental effort, increased substantially. And we think that's just a micro example of what is much closer than many people think in terms of having non-invasive, brain-controlled capabilities in our everyday entertainment and gaming consumption.
Yeah, I think what I'd add probably would be, and I kind of think about 3 different things. There's kind of publisher layer stuff, there's platform layer stuff, and then there's also where what we have in games will apply to the broader world. At the publisher layer, what fascinates me is the dislocation, because I see it and I cover everyone globally, the dislocation between knowledge of the use of AI. And so, for example, I have one CEO a few weeks ago tell me, I don't think we're going to have AI develop 3D assets for the next 5 years. But last week, I had a conversation with a COO who literally had an AI fired up, got that thing producing 1,000 images in terms of he literally told him, the AI, pretend you're a 20-year-old boy from Kansas and these are your interests. Build me a character that flows with that. He had 20 other AIs fired up. Japanese girl from whatever, pretend you're a Korean from whatever, figure out something that works. Then they literally had another AI go on top of that and debate with the other AIs to figure out what actually works, what doesn't. All of a sudden you've got character, 2D art, then build me the side, the back, the front, I've got 3D asset. Okay, how did that guy figure that out and the other guy didn't? It's just a dislocation of information. Another example is testing of games. So many of you maybe in live services, you have all your KPIs, user churns. Why? I don't know. Okay. Same COO set up an AI to go through, he trained it to play his games. And again, pretend you're a 20-year-old boy from wherever, pretend you're a 20-year-old girl from wherever. And the AI would play it faster than any human, figure out what it is that made it churn based on the personality that you assigned it, then tell you what it didn't like, then give you ideas as to what you can do to fix it, and then you iterate from there. fascinating. And I've seen some games actually apply this already, and 10-year-old franchises that have managed to drive growth again, literally by figuring out retention better, right, for example. So that's really compelling, and I don't think we do enough as an industry to talk to each other, candidly, on that front. Then I think on the platform side, what fascinates me is some of the tangible things that are going on. So for example, AI is probably going to solve the cloud latency issue in games, right? And there's that last mile, FPS, whatever, fill in the gap. AI will do it. You think about procedural creation, these type of things I think are pretty compelling. And we're not actually that far away. I think that candidly, I've seen some clients who have world models that are pretty close. I think we're 2-3 years max. And then I think on the where this industry will play in, I think gaming data actually ends up becoming the key source for real world navigation for robots and everything else. Because you can training on game simulation, there's nothing quite like it. And I think it's literally the path of going from AI that just responds to you to AI that can imagine. And we're also not that far away. I think we're max 2-3 years away from that. So yeah, I'm very bullish. I think cost is an obvious one, but getting the cost out requires people who are willing to test it. The problem we have as an industry is that devs are scared of it. Totally get that. So really, it's the executives up the top who are willing to put skunkworks teams together to go and figure this stuff out. And then I think on the platform side, it's all happening. And I think, I think we either embrace it or you may struggle in the future, is my sense.
I would just add a quick note on that last point you made. We are seeing pitch decks from every company that offers, automatic highlight creation for video games, or a community for you to share your best kill shots, and all of those are now pitching. We are a training data source for new, open world generation models. I think it will bring up potentially some interesting licensing issues. Historically in this space, for the most part, if you stream yourself playing a game, the publisher of that game effectively gives you the rights to do that, and they don't make a claim that they necessarily own the content of you streaming their game. It generally adds to the ecosystem, it draws more attention, it promotes the gameplay. If you then start saying, actually, I'm going to sell every video of myself streaming Fortnite to an AI engine that is using that to train a model that they're going to use to produce, interactive, simulated worlds that are indistinguishable from reality, maybe Epic Games has something different to stay at that point. So I do think we are absolutely seeing this. It is pretty clear the large foundational model companies believe that real humans playing video games and obtaining video footage of that gameplay, ideally that corresponds to button level, log level data, is the singular best source for training exactly the type of models that you're describing. I think it's going to be a fascinating space to see develop.
And the last point I'd add is if you play that logic forward, what survives and has a moat in an AI-enabled world? IP, right? At the end of the day, if you have franchise love from your player base, they will keep coming back to you. And I think the smart publishers have figured that out, which is candidly why you see them doubling down, right, on their own franchises and things like that, beyond cost and margin pressures. Because I think they look and say the value in that has a longer runway ultimately, and they're probably right. And so protections and things I think are very important, and that's a whole legal area that I'll leave to another day. But yeah, I think that's kind of where the compelling opportunity is.
Well, Hamal, Lloyd, Tyler, thank you so much. I know we're at time and folks are trickling in for the next session, but thank you all so much for the time, and we'll be roaming around the halls, so hope to find you.